Hey traders, Jamie Sedley here with your daily FX technical focus for November 11th. We'll look at the British pound against the US dollar today. We do have the BOE inflation report tomorrow, Wednesday morning. But I do want to, mention the fact that we did have, a number of outside reversals on Friday against the dollar, as well as key reversals at very important technical levels. Just, off the top of my head, the euro made a key reversal right in its 23.28, 23.95 support zone, which has been cited for some time here as a possible end to 5 waves down from the May high. You also had, the Aussie dollar came into very long-term pitchfork support and made an outside day reversal on Friday and is actually attempting to follow through on that outside day reversal today. So, potentially entering a weaker dollar period, which actually the seasonals do favor, topping out the dollar over the next 2 weeks, depending on which currency you're looking at. They're kind of scattered across the next few weeks. But that said, the British pound here, we have to go on the evidence that we have at this moment. And, somewhat conflicting, I guess, because you've got a downtrend channel that's very much intact here, okay? Have traded into, a potential support area, just trading around it, if you will, from last November's low. So actually, this is November 12th. So really, we haven't, on a net basis, we're unchanged over the last year in the British pound. You do have the big 57.20 to 50 area just below the current market. Okay, that's the 61.8 of the rally from the 2013 low, as well as the June 2013 high. But then on the other hand, you have an extreme divergence here with RSI, with momentum, warning of, if not a, at least period of consolidation, perhaps a stronger reversal to the upside. Right now, you did have divergence here, okay, with RSI in early October. This I don't pay much attention to because RSI is very, low, oversold, if you will, below 25. That actually indicates you have a strong downside momentum still in play. Here, divergence, but RSI is above 30, warning that, the trend has indeed been, petered out and momentum has waned enough to turn higher. But the downtrend channel intact. And last week's high of 160.20 really is, where I'm drawing a line as far as any bearish possibilities are concerned. So if we move to the hourly chart, okay, we've got a running triangle, from basically formed throughout all of October, okay? And a running triangle simply means that wave B is below the origin of wave A, which would be here. That wave A origin is 59.40. Okay, that's kind of resistance now, as you can see. It's been a, fairly an inflection point on numerous occasions. Also want to highlight a measured level, which is 59.61. That would be where the rally from Friday's low would consist of 2 equal waves. And as we know, in corrections, if the larger trend is still down, you're likely to see a rally with waves that sport equality, because that's very common to corrective moves, okay? Meanwhile, if we do blow through this, we get above 160.20, which was last week's high, and you end up making, breaking through the prior week's high, and you get to 160.40, that would be the 1.618 relationship. That would actually tell you that this is an impulsive rally, because you'd then have, a 1.618 relationship, which is not all that common in corrections, okay? So for that reason, 59.60 kind of an area on BOE inflation that if you get a spike up into there, you start to see the market trade off a bit, you might be willing to take a short with a tighter stop. We'll highlight as well the fact that 59.65 is actually where we opened the month of November. So, that alone for me is an important level. I always look at month opens and, year opens, for example, week opens to a lesser extent. But month opens, can be great. It's actually a trade for that. I call it the touch and go. You come off, hit the month open, and then continue the direction you were going, which in this case was down. So, very simple trade idea to potentially sell into 59.60, stop up here at 60.20. Would look to target 57.20 to 57.50 as a first level and see if you can catch a bigger downtrend with the rest. But, do want to drive home the point that, please, use stops 160.20. If that goes, you may very well see a much bigger advance in the pound dollar. All right. Okay, so that's it. Again, pound in focus today and then tomorrow with the BOE inflation report, and good luck. Bye.